All right, so like I was saying, now that we're recording, so today we're going to be going over candlesticks. If you already took the advanced course, you already know all of this information already, but we have to get the basics out the way. So let's get into it. I'm gonna share my screen. Hold on, let me share my screen real quick. Oh, I gotta hold on. Oh wait, hold on. I gotta start this recording over, or I gotta. All right, we're back. All right, can y'all see this? Like I said, people that took the advanced course, you already know this, but if you want to learn it again, that's fine. Can y'all see my screen? Cool, 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 cool. Okay. So let's get over candlesticks. Candlesticks are what you see on the charts. That's what we're looking at to actually, say where price is going. What is price doing? This is your price action. So whenever you hear us say price action, we're talking about the candlesticks, right? So this is important. A lot of people don't trade candlesticks, which is kind of weird to me. A lot of the beginners ignore this part. Don't know how you're trading. You're pretty much gambling. But yeah, you want to know candlesticks. All right, so let's go off of why candlesticks are important. Candlesticks provide an image of movement of price, which will allow you to identify market segment quicker, versus there are machines and stuff like this. Like when I say identify market statement quicker, all that means is because there's other ways on the charts, like all charts aren't just candlesticks. So you got some people that might trade lines. I know that Gary sometimes if he want to identify a trend, he might just use a line. Banks use bars. So when it comes to candlesticks, this is normally what us retail traders use. So that's all why I said it, identify market statement quicker. And basically what a candlestick is, it is it packs data of multiple time frames into single price bars. So like on a daily chart, you will have a candlestick will represent 1 day of price, So if a stock goes from, 420 to 430 on a daily, that candlestick will represent 1 day of price action versus on a 5 minute chart, each candlestick will represent 5 minutes of that whole entire day. So that's all it is. So candlesticks provide 4 key points when trading throughout any period of time. It provides the open, the close, the high, and the low. And if you want to put this down, in your notes, candlesticks build patterns that predict price action. It my bad. It predicts price direction once formed. So when we be talking about chart patterns, what you want to do is you're putting all the candlesticks into a pattern, and it's basically giving you a prediction of price action, right? So you want to go over the wait. All right, everybody following me so far? I need y'all to know this part. Cool. All right, so this is technically what we call a bullish candlestick, and this is a bearish candlestick. But right now we're going to be focusing on, the difference. So when you're looking at a bullish candlestick, you have what we call the wicks. You will have those on both candlesticks. You will have these wicks. These are these lines. So when it comes to a bullish candlestick, literally all this is saying is when you start with a bullish candlestick, price starts here, it starts at the bottom and then it goes up. If they push the price up, then this is where that wick is formed, and then this is the close. So whenever you're looking, let's say that, like, to make that make sense, that probably confuse some people. Let's say that this was the stock price was $1, right? Let's say it opened up at $1. So all of this is looking like is, they drove the price all the way up here. Let's say that this top was $2, and then they closed it here, and maybe this was like $1.70. So just because the wick went all the way up here, don't mean that that's the price. This is the closing price, right? And we'll get more into detail on that in a minute. But that's all you're looking at. And a bearish candlestick is literally the opposite. So think of as price opened here. If it opened up at $2 and then it dropped down, now it's $1, and that means it's the price that they brought it to, but this is where they closed at. So that's all it is. So you have the wick, on a bearish candlestick, just to put it in simple terms, the opening price on a bearish candlestick is at the top, and the opening price at the bullish candlestick is at the bottom. And we'll get more into detail on that, but I just want to show you. And this is just the body of the candlestick. That's all. And that's pretty much, how you, if I'm saying that when you want to connect the top of the wicks, I'm basically saying like, price has reached there before. Yes, it closed below, but price has reached here before. So when price runs up, we can see it go right back to that. That's all it means. Are bullish always green and bearish? No. So when we get onto the next size, you will have generally yes, but there are some candlesticks they might be red, but they're actually bullish candlesticks. And you'll be able to tell those when we're about to go over those on the next couple of slides. But overall, these are like the normal candlesticks. Overall, you would just see them, and will be a bullish, this will be a bearish. That's all. So the wick is where it went at like 4 minutes, but the body closed at where I wouldn't say the time, like a candlestick can move anyway throughout the time. This is just me on that particular candle on the bullish candlestick. This is the lowest that candle was, and this is the highest it was, and this is the close price. So don't try to complicate it and like think that it was like a certain time. Don't even make it that hard on yourself. Just understand that this is the highest it's ever been, and then it's the lowest for that particular candle. So like, let's say that I want to run calls or something. I'm trying to think of a good example. Let's say that I want to run calls or something, and I'm giving y'all a price target, and I'm saying like, let's say that this is $3. I'd be like, okay, my resistance level is here at $3, which I'll make that level at the top of this wick. So most likely I'm gonna say my PT is $3 instead of having it right here saying, 270, because it's a little lower than that one. So we just round it up 270 because this is the highest that candle has ever been, right? And same thing with the bearish candlestick. This is the highest it's ever been, and it's the lowest. So if I'm running puts and I'm telling you my price target is here at that lower wick, that's all that I mean. Like, that's the lowest it's been. So most likely price can return to that level. So don't complicate. Like, I know this part kind of threw me off at first when I first was learning. Don't complicate this. This is just the characteristics of a candlestick. That's all. Like, don't complicate this at all, right? It's just the characteristics. So you just want to know that a candlestick has an upper wick and a lower wick, and you just want to know the opening price and the closing price. And remember, it's the opposite of the candle. So just think of price going down. So that wick is somebody that paid the price, but most people paid the body. So no, the wick is like, let me get a good example to make it make sense. So the wick is basically like, have you ever seen like a stock, like let's say Apple, let's say that Apple ran up on a particular candle, Apple ran up to, 160.50, right? But that particular candle, it closed at 160. So that's like, that's all it is. Like, we're just saying that price ran up there, but they brought it right back down to that closing price, right? So that's all it is. And I'm going to show you some better examples with like some actual candlesticks that we actually trade. Because you want to see this. You want to just see these particular two candles and make a trade based off of those. These are not the candles that we make trades off of. These are just a regular bullish candlestick and a regular bearish candlestick. That's all. So don't complicate it. Yeah, that's literally all it is. So next, let's get into a better example. Hold on, we're not talking about trends right now. We're not talking about trends right now. We're going over that in another day. All right. So now this is where it start to make sense at now, right? So number one, so we're about to go over bullish candlesticks first. So these are your bullish candlesticks. So if you want to put in your notes right now, right at the top, bullish candlesticks. There are a lot of candlestick patterns out here in the world, but I am only going over the ones that actually matter. Some candlesticks, like what candlestick do I hate? Like a bullish harmony or something like that stuff that, like we're going over the main candlesticks that you see on a daily basis that actually work. So the number one candlestick is the hammer. This is my favorite candlestick. I actually used this candlestick today on SPY when SPY had made that pump. that pump at first before, like right when it sold off this morning, and then it like came back and made a pump. I actually caught a trade off of that, off of this candlestick pattern. So when we're going over this candlestick pattern, the hammer candlestick is formed with a short body and a long lower wick, and it is found at the bottom of a downtrend. Keep this in mind. Make sure that you writing this down, taking notes. The hammer candlestick is found at the bottom of a downtrend. So if you look at this picture, we see that we had a downtrend, and then we have the hammer candle. This is what it looks like. This is the hammer candle, right? It looks like a hammer, right? And then there you go, price reversed. The hammer shows that there were bears driving the price down. So remember, when we go back to the first slide where we said that on the green candle, we have the opening price, right? Remember, the opening price starts here, right? Remember, we just said that the open price starts here and the closing price is here. So how did this candlestick form? What made it form like this, right? So right here was the opening price. So we opened here. They drove the price down. Bears came in here, drove the price down. And remember, that's the lowest that it has been. And bulls stepped in. So remember, when we're thinking of bears and bulls, bulls are people that want the market to go up. Bulls are people that want the stock price to go up. Bears are the people that want the stock price to go down. When you're thinking of a bull, you're thinking of somebody, a bull, when it strikes up, right? When it strikes with its horns up. And when a bear, when it strikes with its claws going down. So that's all it is. So this candlestick is literally showing you that the price opened here. The bears drove the price down, but the bulls stepped in heavy and bought the price back up, and we closed here. That is exactly how this candlestick are formed. And then remember, now somebody asked me earlier, I want to make sure that it's really simple, because I'm telling you, it's not hard. We're going to have, I'm going to show you examples as well on the charts. So now, when you're looking at this, somebody asked me earlier, now if I see a green candlestick, is that bearish? I mean, if I see a green candlestick, is that bullish? This particular candlestick is always going to be bullish, no matter what color it is. Now, you see on the notes I put on here, green candles hold more weight than red candles. But overall, even if this candle is red, it is still bullish. The hammer is a bullish candlestick. That is why it's important to only trade this candlestick on when everything else adds up, because you will have times where you see this candlestick and it might be at, you know, just floating, and you see price don't even react to it, right? So the best time to see it is on the downtrend. So no, not even if it's we're gonna get to that. Remember, the hammer candlestick is only a hammer candlestick when it's on a downtrend. You have to see a downtrend, right? So really quickly, I just want to show you this one because I know this one by heart. The trade I took today. Let me stop the share real quick. I got a perfect example of this. Today on a trade that I took. Let me show y'all. Hold on, I gotta stop recording real quick. Okay. And then the rest of these, like moving forward, I'm not gonna keep stopping recording and going to look on the charts. We just wait till afterwards. But I just want to show you like an actual live example of me using this candlestick. So today, I actually made about a couple thousand on this trade, right? All right, can everybody see this? Cool. All right, so remember what I just said. It is it is bullish. The hammer candle is a bullish candlestick regardless what color it is. So when we come on this charts right here, this is SPY 15-minute, right? Look at it. Look what price did when they got, my Thinkorswim tripping. Come on, Thinkorswim. Oh, it's tripping. Come on, Thinkorswim. Okay, so right here is the candlestick, right? Literally the candlestick we just talking about is right there. So what happened? SPY sold off, It was at support. This is why I taught you guys support and resistance yesterday. I did not want to teach you guys support and resistance before candlesticks. Is because I want you to know that it makes sense when it's at support or resistance. It makes sense when it's at a level. Anything that you do in trading versus if it's a chart pattern, candlestick pattern, anything that you do has to be at a level. It cannot be in thin air. It has to be at a level. That's why I taught you guys support and resistance yesterday. So right here, that exact candle, even though it was red, it's still a bullish candle. And what did price do? We seen the downtrend, we found the candlestick, and what did price do? It reversed. As simple as that. I mean, literally, boom, that is on the money. And if you want to see another one right here, right before close, we had the market kind of just sold off after this now. But overall, like, right before close, we got another one and boom. So yes, now, yes, I bought a call. I bought, what did I buy? I actually didn't buy SPY. I bought XPX. I bought these at $430 and I sold them at, it was like 60 some percent. It was nice. This was a nice, easy, play. This was actually really easy. And I just wrote it up. So now somebody asked me a good question. Will the hammer show up on other time frames? Yes, it will. Remember, each time frame, if you see it, the bigger it moves, right? So look for a hammer pattern at resistance. No. Hell no. Look for hammer. You want to see these as support because it wouldn't make sense if it's resistance, right? Now it is a candlestick that look like this at resistance, but that's totally different. But this particular candlestick, you want to see it as support. Yeah, support. Okay, now that is where a lot of people get it can have a little bitty wick, like we call it either a hammer or a pin bar. So you see right here, this candle, if y'all can see this, Thinkorswim is tripping. It ain't my Wi-Fi, y'all. It's Thinkorswim. But right here, we still wanted to have like a, we would consider this a little hammer. Normally what I do is I like to hold on. I like to take them, that just threw me off. I like to take them normally if they kind of look a little better like this, but technically you would call this, we say pin bar hammer. It's pretty much the same thing, even with the wick. Yes, it still could be considered a hammer. It can have no wick or a very short wick. That one is kind of a little high, so I want to took this one. I'm not even gonna lie to you. I want to took this one, but this one was pretty much on the money. But this was a perfect situation. Yes, this was perfect. I only take candlestick patterns if it's perfect. I won't try to beat around it. If it's perfect like this, I will take it. How do I know when price action will reverse after the hammer? Is it unsupported? So that's the thing about trading. You never know that it's going to do like that. Unfortunate, with trading, you never really know that price is going to reverse. You just trading your charts and, it's supposed to reverse. This is a bullish candlestick pattern. And we all know that. Can somebody tell me if I took this trade, where would I cut this trade at? Not even price wise, what will make me cut this trade for a loss? Can anybody tell me that? Thank you. Right below support. Or back in 2020, it was close below support. That's the exact word I was looking for. A close below support. So that means if you've seen one of these candles close below this 426.80 level, then I would have cut this trade, right? Now, I said, remember what I said? I said a candle closed below, right? Because the next candle, what happened? We had a wick come below, but we still closed above. Remember, we still closed above support, so I'm still holding this trade. That's why I say you want to, you don't want to, just because you start seeing price come below, you don't want to go ahead and get scared, right? And just cut. You want to see it close below. And I'm gonna show y'all an example of what happens when you don't wait for the closes. Because I lost some money today on a dumb trade that I could have avoided. Yeah, so even if it opens below, some people will manage their risk and cut if it opens up below. But me, honestly, I just wait for it to close below. But this particular trade, I mean, this was a perfect example of a hammer Candlestick pattern, that's all it is. You see the hammer, you see the downtrend, you see the hammer as support, and don't complicate it. Do not complicate it. If you see it, what a lot of people do is, I will give y'all a pro tip. You don't have to do this, but just like a pro tip, if it's red, I will wait for another green candle. Like, so like maybe if I start seeing this green candle and then see it here, I would enter then. Now, if it's green, sometimes if it's green, I'm just taking it. But if it's red, I kind of wait for another green candle just to have more confirmation. That's all. But if it's green, I kind of just jump in. Yeah. Oh, nice catch. Nice catch. That's another thing, you want to have volume. So like Sterling just pointed out, as you can see on this candle, we kind of had a little like versus the volume here on the downtrend was kind of low. And then kind of on this candle, we kind of like spiked up a little bit. And then we had even higher volume on this green candle, confirming the push. So that's all it is. I don't want you guys to complicate candlestick patterns. You know what I mean? Like, it's like, you know, it's a hammer candlestick. We know that that's a bullish candlestick pattern. If it's red, all you're doing is, if you want more confirmation, especially in this market, because things be just going wherever it wants to do. If it's red, you just want to wait for another green candle to be next to it. Or if it's just strictly green, then you could just take it solely off of being strictly green, right? And you want, as long as the volume is there, it'll go. Would you rely on the RSI and other factors, or strictly? So me personally, when it comes to price action is king, right? Think of price action as it's king, right? So like, based off of this pattern, I actually didn't use any other indicator. I took this trade straight off of price action. This trade was straight off of price action. I didn't use any indicators or anything. I seen the hammer and I just took the trade. I think I got in. I did some risky stuff. I seen the hammer right here. I let it form, and then I seen it was wicking here, and I kind of bought around this wick right here and just wrote it up. I did some risky stuff. I didn't wait for the close above, but if you want to, you could just wait for the close above. So what time frame are we watching this play? So this is the 15-minute. So normally what I do is, in this market, I noticed that the market likes to have like these little reversals. So that's kind of what I was waiting on all day, because I had already took a loss this morning trying to play A and B to the upside. So I already took a loss this morning. So I didn't want to like chase puts. So I just sat here and waited for to see like where SPY would like to reverse at. And I was just watching my levels. I came to the 15-minute because the 5-minute has a lot of noise. And I came down here and I just seen it and I just took it. So will order be news, price actions? So you have, first, let me answer the first question. What time frame? So this is a 15-minute. Now, when it comes to time frames, I recommend that you use the bigger time frames. So like, not gonna lie, I have never traded a hammer candle off the 5-minute. They generally don't work as well. The 15-minute is cool, the 1 hour is cool. But mainly the only time that I would actually trade, like if we're being completely honest, the only time that I would actually trade a hammer or any candlestick pattern is on the daily chart. That is mainly when I would trade a candlestick pattern, you know, because if you see a hammer on a daily chart, you know, as support, I'm not gonna lie, that's normally a big move. It normally pops almost automatic the next day. We're gonna go over the next candles. Yes, there is a bearish hammer. I got those already written down. But just to give y'all a pro tip I know it's not a swing trader market. I know it's ugly for swing traders, but eventually the market is going to get back to where, you know, where we can swing trade again. And if you see a hammer candle, I'm not saying YOLO your accounts, but that is a very strong pattern, right? I'm not saying YOLO your accounts, but if you can see a hammer candle as support on a daily time frame, even at the 200 EMA or, you know, any of that good stuff, any support, normally a very strong sign, you know. So I'm just being honest. I've made a lot of money off of trading just this candlestick pattern alone. I love this candlestick pattern. So to put in your notes as well, I would say, to put in my notes, I would say stick to bigger time frames when it comes to candlestick patterns. That's all. Like I went, don't be hitting me up talking about some Jay. It's a hammer on the 5 minute. I'm telling y'all, I keep telling y'all, look, I don't care about the 5 minute. That's only for my entry. So you want to stick with this candlestick pattern on the 5 minute and just make sure it makes sense whenever you're taking them. You know, like, so like this was a hammer, you could have took it there. But like this stuff like this, like trying to force this is not, like none of this is that, right? So you just want to be strict. You want to make sure that's support. But let's go back. So let's go finish our candlesticks. But that's just an example. Did everybody understand that this example? Strong. Strong. That is on the 4 hour, that is strong. I remember last year we had like a 500% play on square, and literally I just seen a hammer candle on the 4 hour and I just signal calls and it was 500%. I've been watching those candles all day. Those 5 minute handles were mainly just consolidate. Yeah, like don't even trip off the 5 minute. Usually use these on the bigger time frame. But yeah, I had like, I'm telling you, I had 500%. I literally just seen this candle. Yes, and no, anything that you do, like I'm telling y'all, Sterling giving y'all the game too. I keep telling y'all, anything that you do makes more sense at a level. It has to be at a level. I'm not taking this trade if it's not at a level, right? It has to be at a level. Right here, I'm not gonna say this a hammer. You got some ugly like here. Okay, so like right here, we see a hammer candle. It's not at a level, and it kind of did not work, right? So that's all that means. But yeah, stick to your bigger time frame. So let me stop the recording real quick and get back to, because I don't, let me see, will it let me go back? Yeah, I still will. All right, so back to our thing. So I hope that made sense for everybody. If it didn't, we go over it. Like we will go over it, but that's all it is. So daily time frame is mainly used for swing trading. Yes, and we will go over time frames in detail in another class. So back to this, if you want to take this, and this will be recorded so you can record this. So let's move on to it. I don't want to make one candle take this long. All right, so next is, everybody keep asking, is the inverted hammer. Same thing. It literally has the same exact, it's literally just an upside down hammer, and it does the same exact thing a hammer does. So if you see an upside down hammer, we call it an inverted hammer. If you see this at the bottom of a downtrend, I keep telling y'all that, I'm gonna keep telling y'all this. If it's at the bottom, it has to be at the bottom of a downtrend. It has to be at a support level for it to make sense. You want everything to make sense. Similar to the hammer candle, only difference is the long upper wick is at the top of the body, and this candlestick is found at the bottom of a downtrend. The inverted hammer shows that the bears were not strong enough to keep driving the price down, and the bulls stepped in and took control. Always wait. Now, this particular candle, I will say, this one is a little harder to trade simply because the bears kind of controlled this candle. You know, they drove the price down, and then we finally caught back up there a little bit, and we finally was able to close the price. But overall, the bears still control this candle. So as a pro tip, you don't have to take my tips, but if you want to, yes, there are red inverted hammers. Same thing. You will have, anytime you see at the bottom of the downtrend, there are red hammer candles. So I won't focus solely on color when it comes to candlesticks. I will focus on the characteristics, right? So the color will throw you off every time. I will focus on the characteristics. So this is the characteristics of a inverted hammer. All it is an upside down hammer. It can have like a little short little wick, but generally I like my candlesticks to look perfect before I take the trade. So a little pro tip for this candlestick, I have back tested this candlestick a lot. And I would basically say you kind of want to always wait for this confirmation candle. So a confirmation candle will basically be the next candle. You will want the next candle to be green to confirm an inverted hammer. You will, put this in your notes, you will want the next candle to be green to confirm an inverted hammer, right? So remember, the bottom of a downtrend, you notice the candlestick pattern, and then you got the confirmation, you know. And after this, I actually got, like, I can show y'all that, but we'll go over that in a minute. So everybody understand this candlestick pattern. It's literally that it does the same thing as a hammer. You just, the only difference with the hammer is you're just gonna we're not going to trust this candle 100% all the way. We're going to wait for that next candle to be green. And remember, you see at this bottom of the downtrend, it works better on bigger time frames. All of these do. All right, next is one of our favorites. Man, this candlestick, I haven't traded this one in a minute, but this candlestick takes me back to good times. You know, can you talk about price action real quick? Exactly what it means? No, don't over. This is price action. The candlesticks are price action. So as these are price bars, and that just mean like, you know, the price is now $1, $2, $3. This is just showing you like that's all it is. Like this is price action. Candlesticks are price action. Don't like overthink it. This is just this. This is this. When we saying price action, we're just talking about the candlesticks. Okay, so this is another one of my favorites. Remember, every candlestick pattern I'm showing you guys are the most effective ones. These are the ones that you will see on a daily basis, and when you see them, you will react on them. So this one as well. Yeah, I don't know if you guys remember for my OGs back when we was on Slack, when me and Isaac used to tag McDonald's. For some reason, McDonald's make this candlestick pattern a lot. So this is one of my favorites. You know, we literally used to like 200% McDonald's with this candlestick pattern, still relevant to this day. So the bullish engulfing pattern is formed of two candlesticks. So out of the hammer and the inverted hammer, now the bullish engulfing is two candlesticks in one, right? So you can't say one or the other. It has to be two candlesticks to be a bullish engulfing, right? So a bullish engulfing, you have basically what I told my mentees and they understood it. Basically, you want the green candle. Now you can't have two red candles. This particular candlestick pattern has to be exactly like this. It has to be a red smaller candle and a green candle eating the red one. It has to be big enough to eat this one, right? That's just to put in your mind. It's engulfing. You want the green candle to look like it can eat this candle. And it has to be these colors. It has to be a red smaller candle and it has to be a large green body, right? And it's supposed to be big enough to eat it. So the bullish engulfing shows that the bulls stepped in the next drive, pushing price up past its previous candle's highs. So what you want to do is, does it have to engulf with wicks? I would say I've took some trades where it engulf with wicks, but I'd rather just like seeing like the most effective ones. I'd rather have the body engulf it rather than just the wicks, if that kind of like made sense. But I have seen people take it as long as the wicks engulf it. I recommend the body. I'm not even gonna lie to you. It's a little stress-free if it's the body. So when it comes to this candlestick pattern, this is a very strong bullish candlestick pattern. This is one of the favorites. Does the smaller candle have to close or open within the engulfing? Yes. So that's another pro tip. So you will have some traders where they will you will see sometimes where this wick and this wick will line up. So like this wick will be here or like the candle will be there. If you want like a higher chance of this candlestick working, you want this whole candle, even though you want the lower wick to be lower than that wick, and you want the higher wick to be higher than that one. You just want the whole entire body to be higher. It makes it has a higher success rate. I actually put this in I don't know why it's not on the slide, but that's one of the pro tips as well. For each candlestick, I got like a little pro tip. So you see how this body is still even like the whole body is still lower than this wick. That kind of like gives you like more, that gives you more like it's like a higher percentage chance of it happening because nothing is 100% in the market. But you know, if this candlestick pattern is like 80%, you know, with that, you know, with the body being lower and the wick being lower, then this candlestick has a higher rate of working out. What is the best time frames to use this pattern? The daily. When it comes to any of these candlestick patterns, the daily is always going to be your best friend when it comes to candlestick patterns. And remember also, when it comes to this, you want to see it at the bottom of a downtrend. And I'm gonna show you why. It's just like all of the bullish candlesticks, all of these are basically reversals. So you just want to see a downtrend, you want to see that red candle, then you want to be able to fit this candle in that one, right? rule of thumb is somebody said that you want it to be 2 times bigger. You know, if you can put this in here 2 times, then there you go. You got a bullish engulfing. This particular candlestick pattern almost must be a support. Yes, you still want it to be at a support level. Any of these, anything that you do in the market, if you're trying to look for a reversal, you want it to be at support. If you're looking for a reversal, like at a resistance, like if you're looking for stuff to come back down, you want it to be in the resistance. You don't want to trade anything unless it's at a level. That's with chart patterns, with anything that you do in the market, it has to be at a level. You don't want to make any trades in midair. And that's what a lot of traders do. And that's why they be like, oh, I hate candlestick patterns. Oh, I hate chart patterns. They never work for me. Well, because you're taking them in thin air. It's not a pattern. You want to have a level. So this particular candlestick pattern, if you want, now I'm just telling you what I do. If I see this candlestick pattern on a daily time frame and it looks good on the downtrend, you normally will only see these, like, it's not really, I'm not gonna lie to you, it's not really many fake outs when it comes to bullish engulfings. Normally they're a strong indication of, you know, the next day normally be green. It's kind of like I said, nothing is 100%, but this candlestick pattern don't fail me much at all, especially on the daily time frame. And if it makes sense, downtrend, normally this candlestick pattern works. I normally won't wait for the confirmation candle. If I just see this, I would just swing trade, and then obviously I will be in profit on this next candle. That's just me. iPhone, thank you. Where would your stop loss be for this? A good question. So if you want when it comes to this candle, I ain't gonna lie, this one is hard for a stop loss, mainly because if you want a real genuine stop loss, it will obviously be if a candle closed below here. But as you can tell, that is a lot of room to drop, right? So what people normally do is, and Isaac do this, he will make his stop loss is if we close below here, if that makes sense on that. Also on that candle that we're engulfing, you will you don't have to draw like an actual support line. It will just draw like a regular line. And if price reaches below there, then he will cut. It kind of like takes your, well, how do I say? It takes your it cuts your like losses in half, if that makes sense. Like, did that make sense to everybody? So if you were to like make a stop loss here, it would just be like wherever this is, you will. Yeah, that's how the strat method. I don't even know what the strat is, but yeah, so you would just make it at that one. And that would just be your stop loss. But yeah, this candlestick is very strong. I like this one as well. Like I said, the bigger time frames will work the best with this one. But okay, so yeah, this is a good question. Somebody just asked, so when would you enter here? So me, I'm going off of me. Once I see this candlestick pattern form, I will enter. You know, once I see that it's like this candle is fully formed, like let's say like for me, the market closes at 3. So let's say I see this candlestick on the downtrend on the daily time frame, and it's like 2:58, like, you know, a couple minutes before market close, I will go ahead and get into this trade now, because normally the next candle is going to be that candle to start it off. Or you could just wait till the next day, or most people, what they do is they enter whenever price is above this closing price. So like, let's say that, remember when we talking about this is the open price on the bullish candle and the price gets here and close, some people will wait until this next candle is above here and then enter there. It's kind of really how you want to do it. It's less riskier here. But honestly, if I see this, I just enter it then. When I used to do my buzzer beaters all the time and they would hit, I mean, literally, if I just seen this, I just get to at 2:58. Boom, it's a bullish engulfing, and boom, next day it pops that next morning and I'm selling. Somebody asked me, can you use this for swing trading or day trading? I'm not gonna lie, I've tried this with day trading. I don't like it with day trading because it's a lot of fake outs on the lower time frames with this particular pattern. I normally only swing trade with this one. That's just me. Some people might have success with it, but for me personally, I only use this for swing. Most of the candlestick patterns I only use for swing trade, unless it's like a hammer. What makes a candle close exactly? That's just the price. So like let's say we've seen this on the daily. That just means that like if we were trading Tesla closed at 850. So your entry will be if the next candle is above 850. That's literally all it is. For this pattern, does volume help with yes. So that's another thing. Now it's gonna be hard to see volume on a daily time frame. So you would just like kind of look at like, the volume on the lower time frames, but everything that you do has to be at a level and it has to have high volume to be beneficial. If it does not have volume, and we will get into volume in another class. Right now, we're just going over candlestick patterns, but volume at a level. Volume, put that in your head. Volume at a level, volume at a level, volume at a level. Because sometimes these candlesticks, especially with candlesticks, you'll see this more with candlesticks and chart patterns. You will see a candlestick pattern and it's no volume. And you'll be like, okay, why didn't it work? Because there's no volume. That's literally just algos just moving it, doing whatever they're doing. Should we take this candle at resistance level for calls? No, you take this as support. We're going to get into the resistance. Remember, these are only bullish candlesticks. You want every single candlestick I didn't showed you so far is only at support. Only at support. Because remember, we're going off the downtrend. The only way this candlestick works, we have to see a downtrend first and then reverse, right? That's all we're doing. So support, remember what we said. Support is the floor, right? So what happens at the floor? We bounce off the floor. Then at resistance, we reject the ceiling, right? So that's all. That's why this candlestick pattern, think about it. It'd be kind of like when you really think about it, it's kind of common sense. You're like, okay, a bullish engulfing on a downtrend. We know that this is a reversal candlestick pattern. So where would it make sense to reverse it? Would it make sense for a bullish candlestick pattern to reverse at resistance? Or would it make sense for it to be a support? So like you gotta, when it comes to trading, you just want to like think of like common sense, right? Like you just want to be like, okay, it makes sense to bounce off support. So it makes sense to see this bullish engulfing here, right? And that's all it is. Like for you will start looking at these patterns around 250-ish. In this particular market, I'm not gonna lie, I hate saying this particular market, but yes, I would kind of wait to like that 250-ish. I'm not saying that you could trade these candlesticks at any point of the day. It's just that with swing trading, all these damn reversals, I just wait to the end of the day. And especially if we swing it off the daily time frame, it might look like a bullish engulfing at 9 o'clock in the morning, but by the end of the day, it could be something else. So if you're obviously on a daily time frame, to see this candlestick pattern, you will have to wait towards the end of the day anyway, right? So that's normally when I use these candlestick patterns. In the normal market, you will see these on like the 4-hour. That's actually sometimes like, that's what I'm saying. Don't strictly just limit yourself to the daily. I'm just saying what I use it off of. But sometimes you will actually see something like this on a 4-hour, like that first 4-hour candle was here. And then that next 4-hour candle is this green candle right here. And boom, we got a bullish engulfing on the 4-hour, right? So you can use it on other time frames. Just it's more effective on a daily time frame for swing trading. On this particular candlestick pattern, as long as it's the bigger time frames, like the 1 hour, 4-hour daily, even the weekly is pretty strong as well. Support. The green candle is on the same day as the red downtrend. No, it depends. Like, so when it comes to that, it depends on the time frame that you're looking at. So on the daily, if you were on the daily, let's say that this was the daily chart that we're looking at, then this candlestick will be yesterday, and then this one will be today. But if you're on the 4-hour, if you see this candlestick would have been from 8 a.m. to 12 noon, and then, not 8 a.m. to 12 noon. Whatever time. Look, this candlestick would have been the first 4 hours of the market, and then this one would have been the last 4 hours of the market. Yeah, that. So it depends. And then if you were on a 1 hour, this would have been the first hour, and this would have been the second hour, and then you would have took your calls, and then that candle would have been the 3rd hour. So it just depends on what time frame you're looking at. That's all it is. Don't complicate it. Just if you see a downtrend, and then you start seeing a huge green candle that looks like it can eat the previous candle, then boom, there you go. You got your bullish engulfing. You can take calls above that price right there, or you could just, when you see it, you could just take calls. As long as it has volume, stuff like that, it should be good. Next, so finishing off the three white soldiers. So these are the three white soldiers. This is another bullish reversal pattern. The three white soldiers pattern is formed of 3 candlesticks, right? So make sure you keep that in mind. The first 2 candlesticks, we went over the hammer. That was 1 candle. We went over the inverted hammer. That is 2. I mean, that's 1 candle. The bullish engulfing, that is 2 candles. Now we're at the 3 white soldiers. This is only for 3 candles. This one, a lot of people get these wrong because these are a lot harder to identify sometimes, because we will have, it won't be as clear as these. But basically, I'm not gonna lie to you guys, I haven't seen these in a while, just because the market has been going down. I haven't seen these in a while, but if the market is trending up, you will normally see these. But basically, it is 3 green candles, one after another with a small wick, and each candle closes above the previous one. So these candles can have wicks on either side, it doesn't matter, or they can have no wicks, it doesn't matter. The whole purpose of this candlestick pattern is it has to be 3 candlestick patterns. Now, I only mainly trade, now these mainly only really work on bigger time frames. Now, I will say that. Now, sometimes you can see them on, like, the 15-minute, 1 hour, but I'm not even gonna lie to you guys, these really only work on a bigger time frame. But some people might make them work on lower time frames. I don't see them that often on lower time frames, but I mean, like, at any time you can still take the trade. So the whole goal of this is, remember, we want to just see the characteristics of this candlestick pattern. So we want to see each candle close above the previous one. So remember, when we just went over the characteristics of a candlestick, remember, they drove the price up, we closed here. So the next candlestick pattern, what you want to have is, you want to have a higher opening price and you want to have a higher closing price. The next one, higher opening price, higher closing price. And that's exactly what, like, that just think of that as the characteristics, right? So you want to have a downtrend, a strong downtrend. This is actually, when you see this is actually very bullish, right? So you want to have a strong downtrend, and then you want to have, consecutive back-to-back higher candles, right? Now these, remember, somebody asked me earlier, can this one, now these cannot be a different color. These has to be red. I mean, these has to be green. You cannot have these are the 3 white soldiers. These have to be green or white or whatever color that you're using, whichever one, whatever color you got is bullish. Because I know back then, white was, because everybody didn't trade red and green. That's why they called the 3 white soldiers, because back then, if the candlestick was white, that was bullish. If it was black, that was bearish. So you want to have, it's already in the name. So just think of these as the green soldiers, the 3 green soldiers, 3 white soldiers. So these have to be green. Yes. So now you will literally just take calls on this one. Since it's so many back-to-back green, we know that it's a little risky taking green. So if it's back-to-back green, you want to take it above this closing price here. So when the price gets here above this, you can make a little line. You want to take it above here. And normally your price target will be, I mean, obviously, your resistance levels. This most likely will be a resistance level, and your price target will be, the start of the downtrend, the high of the start of the downtrend. But your support and resistance level, so you will already have that there, so you won't have to worry about that. We ain't even gonna get talking about race, but somebody, let me ask you questions real quick. Yeah, so you want to take calls after the 3rd green candle. I'm not gonna lie to you, most likely you're already going to be in this trade when you see it go up. But if you don't, if you miss it, if you see these and you can enter the trade still, it's a continuation pattern. And obviously your stop loss will be, when I was telling Sterling, your stop loss would be, you put it right here, if a price comes back lower than this closing price of the previous candle. Do they have to be small candles? Generally, yes. You want these to be small candles. Because if you have too big of a candles, it's gonna be a lot harder for them to work. I don't think you will actually, honestly, when it comes to this pattern, when it's formed, you won't really see any like huge candles. You would normally just see short candles. That's kind of how like they set this pattern up. As long as it's closing above price each time, you'll be fine. But normally they are small. They're never normally, because these are on the bigger, they're never like huge. Now the candle after this might be huge, but normally these are small. Don't trip about the size. But they are not, when this candlestick pattern is forming, it's normally like they're normally like just regular size candles. Quick question. It's the 113 EMA that you use, right? Yes. 113. Not 133, 113. Does that last red candle win? Yep, right there. Yep. Perfect. That's exactly. This red candle right here, that will be at support. Literally. And what do we do at support? We bounce off support. That would literally, exactly. You starting to get it. Do the candle have the same? When it comes to, so that one a little weird. You want them to kind of be the same size, but I would just be honest with you guys. Price action is never going to be exactly the same. Like this day, you might have less buyers than this one, and it might look a little weird in form. Basically, you just want to think of when it comes to candlestick patterns, just think of the characteristics, right? Is you want to have 3 green candles, each one closing above the previous candle, and each price opening above the higher than the previous candle opening price. Best to use, yes. Now you will see this on a daily time frame. You will see this on a weekly time frame. When AMD was making that run up past 100, I think it was AMD. I seen this candlestick pattern. We took this. We used to make money, a lot of money back then, right? The market been killing us right now, but stuff like this used to be money, and it'll go back. How do I remember? Okay, so yeah, somebody asked me this in my last mentorship, how do I remember these candlestick patterns? So what you want to do is you want to print off these candlestick patterns and you want to put it on your trading desk. So you looking at them every day, and eventually they're going to get stuck in your head. The same way with chart patterns, you want to print them out and put it on your trading desk. So you're looking at it every single day, and your mind will start like programming, your mind will start programming to see this stuff. That's how I'm able to identify chart patterns quickly, because I've been looking at it for 2 years now. I see it immediately. All right, so that should be the end. Are there some patterns that are better, that are related? Is this the one you can use and you could use for head and shoulders? Okay, so this is what threw me off, and I knew I was gonna have that question eventually. When it comes to candlestick patterns versus chart patterns, focus on just the one, right? Don't try to look for 3 white soldiers in the head and shoulders. Don't try to look for a bullish engulfing in a bull flag, right? If you're going to trade the candlesticks, you're going to trade just the candlestick pattern. If you're going to trade the chart pattern, you're going to trade just the chart pattern. So that's another reason why I don't want you guys to get like into that, Austin in the chat. But like some people, and I used to have this same exact problem when I was learning chart patterns, because I learned candlestick patterns first. And then when I got the chart patterns, I was just like, well, it don't make no sense. This is a bullish engulfing, but like if you're going to trade candlestick patterns, let it be just that. If that normally how I work is, I'm going to just tell you how I do it. I look for chart patterns first. Those are a lot stronger to me than candlestick patterns, mainly to a lot of people. That's what I like to look at first. If I can't find a chart pattern, then I will look for a candlestick pattern, and then I will make a trade if I like the candlestick pattern. But number one is chart patterns. So that's what you want to look at first. So like maybe if I see a hammer on a daily, that's fine. But if I see a bull flag, I'm going to take the bull flag over the hammer on a daily, if that makes sense. So don't mix the two. If you don't see a chart pattern first, take the candlestick pattern. If you don't see the candlestick pattern or the chart pattern, I ain't gonna lie, don't take the trade. But that is just what this is. So don't complicate the two. Just if you see it, you see it. If you don't, you don't. Chart patterns first. Put that in your notes. Chart patterns first. What if you see a pattern in pre-market? It's still valid. Today on AMD, the pattern started in pre-market. I literally, because I know some of y'all wasn't looking at the pre-market and y'all was like, well, what pattern is this? I literally gathered the pre-market. Now, when it comes to candlestick patterns, no. Don't trade candlestick patterns in pre-market. Because that's what, remember I said these don't really work that well on the lower time frames. And the only time you will be able to really, really notice pre-market is then. And also remember, these candlestick patterns, you want them to be volume. In pre-market, you're not going to have that volume to confirm it as well. So stick to these only as you're trading, intraday, right? Don't trade these in pre-market. Please don't trade these in pre-market. If you got somebody that's trading in pre-market and they winning, hey, they goated. Don't trade these in pre-market. Stick to the bigger time frames. So, all right, I think that is all for the bullish candlestick patterns. Now let's get to the bearish ones. Oh, wait, no, we got one more. My bad. We got one more. This one, I'm not gonna lie, I don't see this one that often. This is actually, I think out of my whole entire trading career, I've seen this probably 3 times. And every time I've seen it, it has worked, but I haven't seen these often. I know Isaac see them a lot. My eyes are not trained to see this. I'm not even gonna lie to you. So this is the morning star, right? The morning star pattern. Remember the three white soldiers were made of 3 candles. So the morning star is made of 3 candles as well. The morning star is formed of 3 candlesticks, one short body candle between a long red candle and a long green candle. And this is found at the bottom of a strong downtrend. What helped me remember this pattern is, think of this pattern as a sign of hope in a bearish market for the bulls. So when you see this pattern, a morning star, think of it as hope. Like the bears are hope. Like this is a sign of hope. Like, okay, we probably actually, matter of fact, the reason why I probably haven't seen this candlestick pattern that often is because we've been in the bull market for a while now. We've been just pushing and pushing and pushing. We haven't had any hope. So we've been having all of that. But it works when it's in. Yeah, I don't see this one all, but I'm not gonna lie, in the current market that we in right now, everything's just dropping. We actually might end up seeing this pattern. It's a sign of hope in a bearish market. So how this candlestick pattern is, like the north side of hope. Yeah, that's what helped me memorize this candlestick pattern. But so you want to see it on a strong downtrend, like we are in right now. We're bleeding right now. And then you want to see price. This candlestick, now I did learn this one doesn't matter. You just want like a short. This normally will be a doji. I will show you guys what a doji is. I don't have a slide for that, but the doji candle is an indecision candle. So that means neither the bears or the bulls are in control. This will normally just be a doji or just like a short body candle. So it'll be like a long, yes, literally, Kenny, this will literally be at support. This will be at a support. So you will see a long red candle, a short small candle, and then you will have another long green candle. And then you obviously will take the trade if price opens up above this closing price right here. You see right there, remember I said that we have the opening price on the bullish candle and they drove the price up and they closed here. So your entry will be above this closing price. So this candle right here, this actually particular candle, this opening price, remember, we want to take it as long as it opens up above this one. So this here, it opened up above, we would have took this trade, boom, just wrote it up, right? So you will see this as support. You want the downtrend, support, and then you want to have the reverse. You will see this a lot on the daily time frame or the 4-hour. I have never seen this on a weekly. I haven't seen this candlestick pattern that often, but like Sterling said, it might be a lot of fake outs. That's why this candlestick, I would just wait for confirmation and then take it when I see it. but I don't see this too often because we normally don't pull back. We pulling back now, but we normally haven't had this for a while. Yes, the small candle, as long as it's just a short, small candle, it can be red or green. It doesn't matter. I think I did hear like a when I was learning candlestick patterns, I think I heard if it's green, then it's like a higher chance of it happening. And if it's red, it's a lower chance. But overall, the color in the middle does not matter. You just want, but now the colors on the side do matter. You just want a long red candle and a long green candle and just whatever candle in between. I've seen them, but I always consider them as a bullish engulfing. Yes, that's actually what a lot of people say. Like normally you will kind of like, because you can, this particular one, you still want this to be like lower. But anyways, yeah, a lot of people do end up just mistaking this as a bullish engulfing, which is fine. It does the same thing, you know. But that's kind of, if I do see it, that's probably what I've already then made it in my head that it's a bullish engulfing. I won't even notice this one, but you know, this is the actual candlestick pattern. All right, so that is a bullish stick. So you can write a line through your notes. That should be the end of bullish candlesticks. I don't think it's anymore. These are the main ones that we trade. We don't really trade anything else. All right, next. So now we're on the bearish candlesticks. Now I will give you a quick disclaimer. Literally everything that we about to go over is the opposite of a bullish. It's just at the top of it's at resistance now. So the hanging man candle is the opposite of the hammer. It must appear at the top of an uptrend, right? So now, can somebody tell me where would this candlestick appear at? What is it? Is it at support or resistance? There we go. Good job, guys. It's that simple, right? So the hanging man shows that the bulls were able to drive price up and there were a huge sell-off and the bears are taking control of the market. This is not bullish at the top of the uptrend. Same with the hammer candle. Red candles hold more weight than green candles. So this can be green. It does not have to be red. If you see something like this at resistance, this is bearish. It can be green or red. If it's red, you don't really have to wait for confirmation. You could take the trade. If it's green, you want to wait for that red candle afterwards. So yeah, it's literally the same thing as a hammer. You just want to have it at resistance. And if you want to know where would your stop loss be, your stop loss will be if price finishes and closes above the candle. But it makes more sense because now I will say, if you, I'm telling you right now, you will see this candle a lot. You will see this candle most likely 90% of the time, but it only works at the top of a uptrend at resistance. You will see these in the middle of patterns and all. You will see these like on one of these on the downtrend, you will see this like in somewhere like that. You're right. And you might get shooken out because it might reverse on you, whatever. This has to be at resistance. That's why I showed you that first. This has to be at resistance for it to work. You will see this a lot. Next, literally, y'all noticing it's literally the same thing as an inverted hammer. It's just opposite. That is literally all bearish candlesticks are, is the opposite, and it's at resistance. So this is the shooting star. The shooting star is the opposite of an inverted hammer. It must appear at the top of an uptrend. It is formed with a short body and a long upper wick. A short body and a long upper wick. The shooting star shows that the bulls tried to continue pushing the price up and the bears stepped in, bringing it down. So they pushed, we pushed the price up and then we brought it back down. Now this one, you will see this. I will take this on the 15-minute. As long as it's not on the 5-minute, I will take this on like the 15-minute, the 1 hour. It's very strong on the daily as well. Like any candlesticks that we're going over today is still gonna hold more weight on the daily time frame or the weekly. I'm literally anything that I'm teaching y'all, I've did it all before. I wish we can go back into Slack. One time Apple was going crazy. That was back when we was like taking Apple up the whole way. And I literally seen this candlestick on the weekly and I like sent the message to y'all and I was like, hey, I'm about to buy Apple puts. And like like a 3-week expiration out, only because I've seen this on a weekly. And then literally like Apple had dropped like $7. Like back then, Apple didn't drop crazy like that. It just, Apple never dropped $7 like that ever. And this time I seen this candlestick pattern, it did drop $7. And it's the body, and is the body of this in resistance or the wick? Does it not matter much? Yeah, it doesn't matter much. Obviously, like it will look a lot better if resistance was at the top of the wick. But if you see it like, if the body is at the resistance instead, as long as it's at the resistance area, this is still fine. Can resistance for candlestick patterns also be trend line? Yes, yes, yes. Anything that, and we're going to get more into trend lines and EMAs and stuff, but anything dealing with like, remember, because EMAs and trend lines are also supported resistance, right? So if you see this on an EMA, if you see this on a trend line, it's the same, treat it the same exact way. Actually, one of the most bullish things in the market is the hammer on the 200 EMA on a daily. That is one of the most, out of anything, forget chart patterns, forget anything else. A hammer candle on a 200 EMA on the daily is one of the strongest bullish reversals in the whole entire stock market. Like whenever I'm waiting for the day I see that, I'm telling you right now, I'm waiting for the day I see that. I'm gonna go to Chase so quick, put everything I can in my account. Let me start telling y'all that, because I'm gonna have somebody YOLO in their mortgage on that damn candlestick. but but no, what I said was the strongest bullish reversal in the market is a hammer candle on the 200 EMA on the daily time frame. So I just type this real quick. Hammer on the 200 EMA on a daily time frame. I'm just giving y'all the sauce, man. This right here, the sauce. On the downtrend, man, I tell y'all, one day, I'm gonna secretly tell y'all to YOLO y'all accounts. I'm telling you, I can't wait till I see that. I gotta find an example. I'm gonna look for one tonight. I don't even. What was the example? I gotta find one. Man, that crazy. I'm gonna find it. I'm gonna look for one tonight. Obviously, like we ain't gonna see one in this market, but just have your money ready for when that day comes. We can find a secret word for YOLO. I'll take some suggestions, because I can't like just tell y'all the YOLO. So I'm gonna have like if I say this keyword, is it just for a bearish segment or a bullish as well? I would say that particular, what I just said is strictly for a bullish segment. I mean, well, it has to be on a downtrend. So remember, the hammer candle still has to be at a downtrend though. Still has to be at a downtrend. And then it still has to be at a downtrend, and you will see the hammer candle at the 200 EMA, and then it'll go crazy. And these patterns, is the change of trend instant, or what happens that week, a couple candles? So good question. Is it instant 80% of the time? Normally, sometimes you will have like a couple of, a little pullback candles or whatever, but it happens like right after. But just the market gonna do what it wants to do. Normally it does happen like right after, because the next candle would normally be that like confirmation candle or whatever. But with the market doing whatever it wants, just keep in mind, just watch for those stop losses. On the Morningstar, does the last candle have to gap up? You want on the Morningstar, you want the next candle. So you want the next candle to be above that closing price on the previous candle. So I wouldn't say gap up, but you want it to be above. And we'll go like for the homework tonight, y'all can pretty much guess what I'm going to have y'all be doing. But all right, let's finish this, guys. So let's not get off the topic. Let's finish this candlestick stuff. So and then we'll take questions about candlesticks in a minute. So the shooting star, so yeah, that's pretty much, think of the shooting star falling to the ground. That's one way that helps me remember it. Just think of, if you see a shooting star, what do shooting stars do? They fall to the ground. I think they fall to I don't know where they fall, but they come down, right? So think of that as a shooting star falling to the ground. Literally the opposite of an inverted hammer. Next, we have a bearish engulfing. You're starting to see how these literally are the opposite of the bullish candles, and they're just at an uptrend, at resistance, and then it comes down. So the bearish engulfing is the opposite of a bullish engulfing. The first candle is a small green body, and the second one is a large red body that engulfs the previous candle. Yeah, that's literally green. That, so you just, if you can memorize the 5 candles, you literally be good. These are only candlesticks that I trade. These are only ones that most traders trade. You know, hedge funds, they just keep it simple. They don't try to do all that extra stuff. Pro tip: the lower the red candle, the more likely price will fall. Same way with the green candle. The higher the bullish candle, the higher the bigger the green candle is in the bullish engulfing, the more likely it'll go up. Same exact way with the bearish engulfing. The lower this comes, the more likely it is to fall. So you will see these at resistance. You want to see an uptrend, and you want to see it stops at resistance, and then it comes down. This candlestick pattern is very effective. I've used this multiple times. I don't know if, I know Sterling in here, I don't know if he uses this one, but he could tell you as well. If he does, this is pretty much money. This is a good pattern to trade. You can see these on like the 15-minute, the 1 hour. It's kind of really just like, though, anything but stay off the 5-minute. I'm telling y'all that. Stay off the 5-minute. Use that only for your entries. Yeah, I can share this. I can share this with y'all. Would the green candle touch the resistance? Yes. Most likely it will. So kind of how it work is, your resistance will probably be pierced in these wicks, or it might be at the top. I wouldn't say that it has, as long as it's around that area, it'll be fine. I'm not saying, like, I don't want to tell you guys like it has to touch resistance on the money, because remember what I said yesterday, your support and resistance levels, remember, you are making them. You're not a machine that's actually making them, that these hedge funds have. So give or take your support and resistance levels to be a couple cents off. So it might not touch it exactly, but as long as it's in that resistance area, it's fine, right? So you just want to make sure that this candle engulfs the previous ones. And if you want to use zones, I know Gary uses zones a lot. I use them sometimes, but yeah. I only recommend near, only take these near resistance. You know, if you just taking them just because you see a green candle and a red candle is larger in midair, you will get faked out all day long. And that is what I wish. That's why I'm keep telling you guys, make sure it's at these levels, because that is one thing I did not know when I first started trading, was that it had to be at a level. And I used to hate candlesticks just because of that, because I'm like, they never work. But yeah, so just make sure that you're using them at a level. That's all. Candlestick pattern is in there, no good, no good. That's what, not even just candlestick patterns, that's what chart patterns as well. A bull flag in thin air is not a bull flag. You want, how a bull flag works, we get in chart patterns, but how a bull flag works is it comes to resistance, and then it pulls back and start consolidating under resistance, and then that's when it breaks above resistance and it go. So a falling wedge, it falls into support, and once it gets to support, it breaks off of support and breaks out. That is, like, you want to have it at a level. If you ever make a falling wedge and you keep seeing it fall, that's obviously because you probably did it in thin air. So next, candlestick pattern. Did that make sense what I just said about that though? Just, I know we're not on chart patterns, but you know, a bull flag is supposed to get rejected at resistance, and then that's why it becomes a bull flag. It consolidates under resistance, and then it breaks above resistance and keep going. A falling wedge is literally it, you know, it falls, it's falling into support, and then it bounces off support and breaks out the wedge to the upside. A rising wedge, price is going to resistance, and then it breaks down from resistance down. All these chart patterns, it's the same way with candlestick patterns. You want to have it at a level. All right, next, the three black crows. As y'all can see, same thing as the three white soldiers. So the three black crows are the opposite. Yeah, without the love, you just hoping and wishing. Hold on, let me answer this question real quick if I get on this. So the right candle has to be bigger than the left one, no matter if it's a bullish. Yes, yes. That, remember, a bearish engulfing or bullish engulfing, just the second candle has to be bigger than a previous candle. That's all it is. All right, so the three black crows. The three black crows are the opposite of three white soldiers, formed by three red candles with a short or no wicks. It's either short or no wicks, right? You don't, now if you see long wicks, then it don't count. You want short wicks. You know, you don't want those huge long ones. You want these to be short. Same way with the three white soldiers. This pattern shows that bears continue to drive the price down lower each day. This is considered a very strong bearish signal. You should be seeing this pattern now in the current market that we are in right now. You should be seeing this a lot. You should be seeing this a lot. So same thing. You want to just see price keep closing. So right here, this is the, remember, started here, we drove the price down, we closed. You just want to see the closing price still lower each time. Each time it closed lower and lower. You find these on the 15-minute, 1 hour. Like I said, as long as you stand off the 5-minute, you're okay when it comes to these candlestick patterns. The 5 minutes okay for chart patterns, but candlestick patterns, you kind of want to, you know, use those bigger time frames. You will see these on a daily. You will see these on a weekly. It's just harder to see these types because right now we have all of these fake pops and stuff like that. So it's harder to kind of see stuff like this, but you will see them. Like, you know, we're trading for pretty much everybody here is trading, going to be trading for the rest of their life. So you will see these candlestick patterns. Next, as you could tell, it's the opposite of a morning star. We have the evening star. It's literally the opposite. So we want to see this at resistance. You will see this a lot as well. I've seen this. I've traded this a lot. So I don't see the morning star much, but I do see the evening star a lot. The evening star is the opposite of a morning star. It is formed of 3 candles, one short body candle between a long green candle and a long red candle. Remember that the colors on these matter. So if you're in an evening star, you want the first candle to be green because obviously it has to be an uptrend. A short body, this will normally be a doji, and then you will have the red body, and then price will continue to come down. The evening star signals a reversal in the uptrend. Pro tip: if the red candle is bigger than the green candle, it is more likely to fall. That's with anything. So obviously they don't have to be the same size. This candle don't have to be the same size as this candle. But if this candle is, like, I'm not saying like a bearish engulfing or whatever. I'm just saying if this candle is bigger than this one, then it is more likely for it to fall. So that's pretty much that. That's just simple. I think that is, yeah, I think that was all for the candlestick patterns. Like, it's literally only 10 that I use. It's not that complicated. These are the only ones that I use. I do want to go back and show y'all something real quick. So when it comes to candlestick patterns, but did everybody understand the candlestick patterns first? They, like, everybody get, like, you know, it's just literally 5 candlesticks and you're just doing the opposite of each, just making sure. Cool, cool, cool. You got to know these. Remember what I said, pictures in your notes. Said don't combine candlestick patterns with chart patterns. If you generally, you want to look for chart patterns first. If you don't see a chart patterns, then you go to candlestick patterns. These are most effective on larger time frames. So really quickly, I wanted to go over this real quick. I wasn't going to do it, but now I think about it, it makes sense to do it. 3 steps before entering a candlestick pattern trade. I wish I would have said this in the course, but 3 steps before entering a candlestick pattern trade. Number 1, you want to identify the trend. Number 2, you want to identify the pattern. And then right here where we say wait for confirmation. So these are the 3 steps before entering a candlestick pattern trade, right? So what that makes sense is why we want the trend. Identifying the current trend will help you follow it. Find out if it's trending up or down. Why the pattern? Identifying the pattern will position you for entry and wait for confirmation. Waiting for confirmation will allow you to confirm your entry and take the trade. Also will cause less risk when trading. So what I mean by this is, okay, here it is. So let's say that we were to, I didn't like for one, we were looking at this, we were looking for a bullish reversal. So we got our hammer here or whatever. So look, we want to identify the trend. Can somebody tell me what is the current trend in step one? What is the current trend right now before the candlestick pattern? Downtrend. Good job, y'all. Down. There you go. So we see a downtrend, right? Then what is the next step? Identify the pattern. So this is the pattern right here, right? We identify the pattern. We're like, okay, we got a hammer candle now. We see the downtrend. We identified the trend. Now we got the hammer candle. Now, can somebody tell me what is the confirmation candle? What is the confirmation candle? The next, yeah, you don't have to try to name this one. It's just the next one, right? So that's all that means. Identify the trend, identify the pattern, and wait for confirmation, Next. Yep, there you go. Good job. All right. Same thing here. Identify the trend. Now, I want y'all to tell me this. All right, so hold on, let's go real quick. We identified the trend. The current trend is a uptrend. This is a bearish reversal. So if we're looking for a bearish candlestick pattern, we want to see it on a uptrend. So this identify the trend. It is a uptrend. Can anybody tell me what this candlestick pattern is? I know the wick is lower, but this is still this pattern. A bearish engulfing. There we go. Good job, right? So we identified the pattern. And now if we wait for confirmation, because remember, it's more likely to drop if this candle is lower than this one. As we can see, it's not lower. So we will, in this particular trade, we would have waited for confirmation. This will be our confirmation candle, and we would have wrote this down. It's that simple, guys. And this is other stuff that we don't worry about right now. But yeah, but other than that, that is pretty much that. Side note, Tesla's at major support. Side note, Tesla's at 148. Major support was 750. Higher alert for puts. So I was actually looking at Tesla for tomorrow. Yeah, waiting for confirmation is the hardest part. So actually, while we're here, I am going to stop the recording, and I wanted to show you something real quick on today. Now, this is off topic for class. For anybody that's gotta go, we're pretty much done for today. You got your candlesticks. This will be uploaded. Try to upload it tonight. It's been doing really well uploading it tonight. When it comes to the YouTube video, somebody said that it was blurry. Give it a little minute and like let the video run a little bit, and then it'll go back. It'll go like back to like a decent quality to be able to view it. But it's not YouTube, it's Zoom doing that. But yeah, just let it run a little bit. Yeah, I'm going to show you. That's one of my things. I'm going to show you exactly. I'm going to have everybody set up your charts. One of your homework is going to be, let me start this recording real quick. It was still blurry. I got to see because I had Keith look at it. He said it wasn't blurry no more. I'm going to look at it. I'm going to see what I could do. I'm going to look at the actual video before I upload it. And if I have to re-upload it, that's fine. But I'm going to look at it today because I don't want nobody seeing no blurry stuff. Well, let me start this recording real quick, guys.